Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Thursday, the 27th of September, 2007. The market's closed. The spiders finished with a gain here, looks like of 78 cents or about a 0.5%. The market, as we know, found supported the 61.8% retracement of the Fed move low up to the high of last Wednesday, and also the location of that rising 10-day moving average. Now it seems as though, to me, the market's getting a little bit tired here. The momentum stocks are really cruising in here, and it's not really bringing the market up as much as you might expect it to. Oil was up a lot today. A lot of times there's a delayed reaction to that sort of thing. We've got the end of the quarter on Friday. So I think that you've got to be very careful in here. It's been pretty easy to make profits the last, well, pretty much all this week, I've found. And in particular, some of those Chinese stocks, they started coming in real hard late in the day. But the S&P 500, you know, we've got a nice uptrend here. We saw yesterday that the prior level of resistance from Tuesday didn't act as support, and now we've got that 5-day moving average is flattened out. We've got this market above the level that I thought that it needed to clear, which was 152.80, and it's holding above there. So the market is making this pattern in the short term of these higher highs and higher lows. And again, price is all that pays, but the rest of that information is good to be aware of in the backdrop, because it could signal that things are getting a little bit out of hand on the upside. And when that happens, a lot of times it's due for somewhat of a pullback. By the way, if you're viewing this on YouTube or anywhere else, make sure you go to my blog, alphatrendsblogspot.com, and listen to that radio interview I did with I forgot the name of the website, but it's on there. The spiders, so we've got a nice uptrend. There's nothing here that tells us that it's in danger of breaking down, but I think that you want to be aware of some levels, which are, first of all, this 5-day moving average, about 152.15. Of course, this level that we saw first is resistance, then act as support at 151.65. Those are going to be important areas. So we've got a bullish-looking market, but there's reasons for concern is basically what it boils down to. And again, price is all that pays. That's what you really need to focus your attention on. The semiconductors continue to struggle, that is, with this 38.40 level. And basically, again, I'm going to say that I'm neutral on this market unless it can clear basically $39 on the upside, or a break below $37.90 on the short term. I think a break below that gives us reason for concern. And yesterday I said that that's possibly the neckline as well of an inverted, or not. Well, I keep saying that because we've seen so many inverted head and shoulders patterns lately that I guess my brain is stuck on that. But it's looking like maybe a little head and shoulders pattern here. We'll see. You know, the important thing is, first of all, breaking, if it breaks below 37.90, and then if it can quickly recover, that's okay. But otherwise, if it doesn't, then it looks like maybe it's headed lower. So just keeping a careful eye on that. The IWM, we had a successful test of the 200-day moving average. It came down, sucked some new shorts in most likely, and some of the weaker longs out of the market. That pullback came also to almost precisely to the 61.8% retracement and the location of that 10-day moving average. We've seen the bounce back above the 200-day moving average, and now the buyers are back in control. It's taken, it did move back above 81, at least temporarily. I said that it would really need to get above and stay above 81 to really be positive. We've got support down here at 79.95, and then of course at the lows from the other day, 79.33. Breaking that level would be a big negative for this market, I think. So again, just same theme is, the upside action is good while it's here, but have a keep an eye over your shoulder, and when you've got big speculative movements like we see in the market here, a lot of times those come before the market gets ready to turn. Again, and on the cues, there's nothing here at all that suggests this market's slowing down. You could look at the volume and say maybe the volume's weakening, but price-wise, the market continues to move higher, hitting new highs each day, new multi-year highs each day. Every day this week, it's closed at a new multi-year high, and today was no exception. It finished with another 0.5% gain here as well. Looking at a 30-minute time frame, might want to keep an eye on a trend line like this. I think breaking below that, and that would probably give you know, this level a little bit more importance as well, which is about 51.10. I think 51.10 you want to watch. Looks like the 5-day moving average might catch up to it about there. But the market's clearly getting extended, but it continues to make higher highs and higher lows. The most expensive jobs on Wall Street are those where the most difficult jobs on Wall Street are to pick tops or bottoms, and you know, don't fall for it. Basically, this market remains in a very solid uptrend. There's no signs of it slowing down, other than maybe volume. But just continue to maintain your stops, tighten your stops. In fact, when you have the market running like this, be sure you hold on to those gains that you've accumulated over the last you know, days, weeks, or whatever. Let's take a look at the stocks I had mentioned. Alexion, ALXN. I'd suggested buying this one around 65 bucks a share, and then I said raise your stop to 66.40, so you should be out of that one. Beacon also got stopped out as well. We were in that one over here and stopped out today of that one. This morning on the blog I had put ACTS. I put some of the Chinese stocks on there. ACTS had a great day, but look how hard it came in at the end of the day as well. You know, these stocks are a lot of fun when they're going. I put CHNG on there as well. Huge move in there today. So you know, these stocks are for aggressive traders. As I pointed out this morning, I said that these plays can be very risky. So you have to be very disciplined about your stops and your position size. CLWT, I thought this one was going to get going. It didn't. I'm out of it completely now. You know, it finished with a couple pennies gain today, but you know, really no strength in there. EFUT, not much happening there either. But PACT was the other one I had put on this morning. Had a great run earlier on, but you got to protect those profits because look how quickly this thing fell apart.